Welcome, everybody. My name is Geoff Green. I'm your host for this month's housing market update. Thanks for joining us. We've got a lot to talk about in relation to housing pricing. Some very interesting slides and information to give to you. So let's jump right in and check out what we have. So, man, the market continues to roll. Inventory continues to be a major problem for us, no doubt about it. Oh, sorry, my slide deck's having some issues there. So let's start out by talking about home prices. Home price appreciation is accelerating again. We were talking about a decelerating situation, not a depreciating situation, but the rate at which homes were appreciating was started to decelerate a little bit. Well, just this past January of 2022 versus 21, we started to see acceleration again. So inventory is just so tight that pricing really has nowhere to go but up. And then you can take a look at, change in prices last year, pretty dramatic, a national average of 17.5% in Q4 versus previous Q4. And if you take a look at over the last 5 years, okay, this is very interesting to note, right? Because one of the big questions that one is probably asking themselves right now, if they're thinking about buying a home, is, geez, should I really buy now or should I wait it out and hope that prices come down? Well, none of us hold a crystal ball and no one can really truly answer that question. But what you can do is you can look at data, and the fact of the matter is, in the last year, prices dramatically increased. In the last 5 years, they dramatically increased by over 10% per year average. Now, that was bound to happen, right? Because we had such a downturn in the marketplace due to the financial crisis. But when you look even further back, right, this is interesting. This is the last 30 years, essentially, almost 260% increase in the last 30 years. So the idea is that, buying a home is still very important. It needs to remain a top goal for just about everybody who has the wherewithal to be able to do it and the desire to do it. Because one way, shape, or form, if you buy a house and you stay in it for an extended period of time, it's going to at least hold its value, if not increase, and help you gain a lot of net worth, right? Which we're going to discuss in a little bit. So forecasts from all of the major forecasting agencies are still forecasting prices to increase substantially. The average of all 7 is 6.1%, which in any market is a healthy increase. The average, if you look over the course of many, many years, is about 4% per year. So we're still seeing projections over that at this point in time, which I think is substantial. So it really comes down to supply and demand, right? And just the inventory has been the discussion for the last couple of years, and it remains the discussion. So if you take a look at this right here, basically what it's telling you is at a neutral market, right, where you kind of have a fair amount of inventory and things are moving at a good clip, so on and so forth. And it's not really a dire situation either way. It's usually 6 to 7 months. And a buyer's market where there's lots of inventory and buyers kind of rule the domain and can call all the shots, that's over 7 months. And a seller's market, which is where we've been now for a series of years, is less than 6 months. Okay, so that just gives you perspective on kind of what a seller's market versus a buyer's versus a neutral market is, right? So let's take a look at, more things to do with supply and demand. So this is new listings, right? And you can see that, January of last year, you can see this, 278,000 new listings came on the market in January of last year. It went up, it bubbled, and this is typical, where you see a lot of listings come on in, the spring and the summer months, and it declines during the fall. But it really declined fast in the fall of 21. And you can see that, this is a measure of active listings, okay, last year. So this is what was actually active on the market during those months. So January, there was 600 active listings, and it really went down. It didn't really come up all that much because as soon as the new listings came on, they came off because there were buyers for them right away. And we're at, in December, it was really a 400, the lowest of the last 12 months tracking. very low amount of listings, and not many new listings coming on, right? If you recall the previous slide that we just looked at. So it's a real crunch, it's a real problem. And if you're just a consumer and you're thinking, is there a housing bubble? 77% of people think that there is going to be a housing bubble. And almost half of realtors, agents, think that there is going to be a housing bubble. So what's to say that there's not going to be a bubble, right? Well, you have to kind of take a look at his history, right? Like, I mean, I've operated through and lived through the last crash, and it was really hard. But it was a very different time leading up to that crash. The case in point is right here. The 4 years, of the housing crash, there was a lot of inventory, 9.6, 9.4, 7.3, 8.5. And now you take a look at, the past 4 years here that we've been in, there's no inventory compared to what there was the last time. And, the market really, truly, the year that it crashed was 2008. That's when really, truly the financial system shock happened with Lehman, and it just was a contagion and ripped through. So you can see that there was a lot of inventory leading up to the crash, right? Whereas right now, inventory continues to go down, and that's the reason why the prices are what they are. Okay, it wasn't a fabricated situation by subprime loans. Okay, and you can see here that the existing home sales hit a 15-year record in 21. So it's the number of transactions is just continuing to motor along. And then this is the most important one to look at if you're worried about a bubble. You can see the volume of loans in billions with a credit score below 620. There was a lot of them being done, which led up to 2008. And then the crash happened, and the banks turned off the faucet and changed the rules. And then it came back to where we are now. So this is a really good diagram, if you will, chart. And it's a good signal to where we are right now, because it means that we're not necessarily built on a poor foundation. Okay, now, does it mean that credit is everything? No. Does it mean that all of these people that have got these loans with a credit score over 620 put a lot of money down into these loans and have a lot of skin in the game? Not necessarily. But needless to say, you can see that, that the system really did clean itself up, and we don't have a huge amount of subprime loans being written. So I think that's really important. And then, of course, if you are one of these people who feel fearful of a bubble and bursting and prices coming down, well, at the end of the day, it's important to become a homeowner. If you have the wherewithal and the desire, it's important to become a homeowner. And this is one of the reasons why. This is just, net worth of a homeowner versus a renter in 2021. 300,000 to 8,000. So there's a major difference there. And anybody who's owned a home during these last 3 years has really benefited greatly from owning that home, because price just shot up. So everybody that was renting during that time just unfortunately got left behind, and rents are on the rise, folks. They're rising just as high as home prices are. And it's a real conundrum for those that are renters. So it's important for all of us in this industry to encourage home ownership. There's no doubt about that. And look at this, and that just highlights the fact of what we just saw. The net worth of a typical homeowner is about 40 times the net worth of a renter. All right, so I always like to give you some other background and just random things that not really anybody's talking about, but that we here in the Housing Market Update need to keep our eye on, and you do too. And there's really some, important people starting to talk about recession. And it's important to know, and we've discussed this in, previous Housing Market Updates, that a recession doesn't necessarily lead to a bad housing market. In fact, many times when you look back over the last 4 or 5 recessions, the housing market did quite well during the recession. So I still don't think that, unless the job markets are absolutely riddled by any sort of economic downturn, meaning that people can't afford to pay their mortgages each month, I don't necessarily see that a recession coming up is going to have a major impact on the housing market. But needless to say, this is Mark Zandi, who is Moody's chief economist. And he's saying that recession risks later this year and into next are now uncomfortably high. And I think that this is a really good point here, taken into all current events. The odds that the Fed missteps and tightens too aggressively are material and rising. Okay, so he's not so sure that the Fed is going to do the right thing, and they don't really know what to do. I think we're just in uncharted water here with everything going on in Russia. So the way that he likens it is landing the economic plane on the tarmac was already going to be difficult for the Fed because of the pandemic and high inflation, but Russia's invasion makes it more likely that the economic plane hits the tarmac hard or even crashes. So it's not necessarily a bright outlook, but I think it is realistic with how difficult things are out there. And this is a very reputable person who is involved in a lot of economics around the world. So, heed his advice, I think. All right, the next housing market update is going to occur on Tuesday, April 19th at noon. It's always the third Tuesday at noon. We'd like to thank our sponsor, NewOp, the Business Opportunity Exchange, where you can view a live view of referrals for real estate and mortgage bankers on newop.com. Check it out if you are one of those service professionals. Okay, so let's go out to our panel at this point and welcome them. Peter Mallon is going to join us, and Keren Gonen, as soon as I can figure out how to remove my spotlight here. There we go. We've got the gallery view going here. Welcome, everybody. Pete, thanks for being here. Keren, appreciate your time.
Thank you.
Yes.
Happy to be here.
So I hope I didn't put too much of a damper with that last slide and reading Mark Zandi's comments. But Keren, let's just start with you on the real estate side of things. It's a crazy time, right? I mean, the inventory is just still so tight. But we are entering the spring market, and I've been talking to a lot of the Green Team realtors in both New York and New Jersey, and it seems like a lot of listings are coming to market. And I'm sure you're running around crazy going on listing presentations and whatnot. True or not true?
Absolutely true.
Okay, so do you feel like we're going to head into a good spring marketplace where lots of inventory is going to come on?
So it's a loaded question because our inventory is now less than 2 months, which hasn't happened for decades. And with that being said, when you work both sides, when you deal with buyers and with sellers, and you have a listing that's upcoming, you're going to have at least 4 or 5 buyers of your own, let alone other agents and other brokerages. So we still have a ton of buyers for every house. Even if we had 10 houses come out in one day, we have enough buyers for them. So I think the need still continues, and those sellers that haven't sold yet are trying to catch the tail end of Corona market. So it's definitely still a very, very active market. Absolutely.
For those listings that are hanging out there, do you see price reductions happening?
Not yet, but they'll get there. The only reason a house doesn't sell is because it's not properly priced, whether it's the agent making promises or whether it's the seller being sentimental and saying my house is worth $1 million and that's what I want in today's market. They really need to listen to their agents, because their agent's purpose is to serve them and to get their house sold, not anything else.
Yeah, no doubt about it. All right, Pete, let's check in on the mortgage situation real quick. I get the sense that we're in a rising rate environment. We're going to be in a rising rate environment here in 22. Although it's interesting, right? Because of all the turmoil going on around the globe, the bond market might actually be very competitive, which could ultimately keep rates from rising too fast, right? Because there's a lot of foreign investment that probably wants to buy those bonds. So it's going to be interesting to really see what happens with rates, right? I mean, what do you think?
Well, what I'm seeing now, I just read, an article where they said that the rates have gone up into the 3s, okay, like the high 3s, but they're actually in the 4s right now. And what's been happening the past 2 weeks, 2 or 3 weeks, it's been volatile in the 4s. It went from 4 1/8. So across the board, 3 days ago was 4 1/2, 4.49. Now yesterday was 4 1/4. It's really, we're looking at rates for our clients every day to see when we get that little dip to lock them, because it is crazy right now. And every time they do something in Ukraine, it drops a little bit. So it's kind of weird that way.
Everything's so fluid right now based upon what's happening over there. It's just such a tragedy, you know.
And then they put in the paper that the rates have come down. Everybody thinks it's in the threes again, but it's not.
Right.
They're saying that the national average is 3.875, but it's not. I mean, across the board is in the fours, you know, and that's making it difficult.
Yeah, and that puts a lot of pressure on all of you mortgage professionals, right? When there's news going out there like that, then people call you and they think that you're full of it, you know, and it's like now they're wasting their time running around and you guys can't deliver because it's not true, you know?
Yeah, we tell them the truth and they listen to somebody that's just trying to string them along, but we tell them the truth, what the rate really is. But the thing I've seen, just a little bit of insight on what you guys are going through, is normally when the rates go up, and historically, I've been doing this for 30 years, just like, you know, you've been doing it a long time. Usually when the rates go up, there's an insurge of buyers. The problem now, you're getting that insurge, but there's no houses for these buyers. So now, normally where the market would be pretty good for us, there's more buyers than there were recently, and there was too many buyers recently anyway. And the foreclosure market hasn't hit yet. They're starting to now. The banks are coming back now with their foreclosures, but the problem that they have is that they're having realtors tell them that they can get, you know, fortune for the houses, you know, some realtors, and they're going to try and get as much as they can, of course, but they're also going to be difficult to deal with. A lot of these things need work and whatnot. So I see that's going to be a problem too. It's going to put more house on the market, but it's still going to be a problem.
Yeah. Well, you know, it's interesting, right? Because it was, you know, obviously during the pandemic, a lot of inner cities, you know, people unloaded from those inner cities because of the pandemic, right? And they wanted to get out into the rural suburban areas and buy a house, so on and so forth. So that happened. And I think slowly but surely businesses are calling employees back into the office to work in the office. So I think over time, people are going to gravitate back into their residences in the urban areas. But I think that they're going to hang on to their residences out in the suburbs and the rural areas, at least for an extended amount of time, until they get tired of paying the landscaper and dealing with the repairs and realize that, you know, they really can't get there that much. So why am I doing it? So I think that some of that inventory over the course of the next couple of years will come back to us. But one other interesting thing that, you know, that I don't have any statistical data to back this up, but I was talking to a very busy and reputable painter in the New York metro area, and he was saying that the units are getting filled, people are coming back, but he's finding that there are a lot of people from overseas or outside of America that are buying these units or moving back in, and it's not necessarily the people that moved out, you know. So now it's like, all right, is there going to be enough inventory within the urban areas for these people who have to commute to get back in? That's going to be an interesting story at some point in time. And I think with all this turmoil that's going on with Russia and everything else that's happening, you know, the United States is looking better and better as a place to live, a place to sink investment. And I think it's going to put even more inventory pressure. So I think we could very well be in this low inventory state for quite some time. You know, I think there's a lot of reasons why we're going to be here for quite some time.
I agree with you 100% because not only that, but people can work from home now. So people, you got to see the Adirondacks. I'm writing loans in the Adirondacks, you know, that you never heard of that before. People are going to the Adirondacks and working in Manhattan.
Yeah, it's crazy. Exactly. Well, they can do it remotely. I mean, you know, there's fantastically beautiful places to live, you know, and usually you couldn't live there because you couldn't get to work, but if you can work remotely. So yeah, it's definitely a boom for all of these, you know, upstate areas, so to speak, right out of the metro area. But one other thing that I was talking with a couple people, and we got to wrap it up here in a minute or so. The impact of Airbnb, VRBO, and people just, you know, being able to buy single family residences and essentially running a hotel in a residential area. I really feel like the municipalities have to clean that up. I don't think that's right. I think there's a lot of people that unjustly are able to buy and gobble up a lot of single family homes, and it's blocking people from owning a home to live in, you know, and that's really what we as a nation need to be focused on. That you know, anybody that has the ability and the wherewithal and the desire to do it should be able to buy a home and live there, you know, and I don't think you should be able to run a commercial operation in a residentially zoned neighborhood, you know? So I feel like that's an important thing.
I see some towns are clamping down on that though.
Yeah, not soon enough and not fast enough. I really do. I feel strongly on that note. I would encourage all municipalities to do that. I think it's important. Okay, guys, thank you for your time. I just want to show everybody contact information of our panelists here today. These are really fantastic professionals that I've known for a long time and worked with for a long time. Here's how you get a hold of Keren and Pete. Thank you, everybody, for joining us, and we'll see you next month. Pete and Keren, special thanks for your time. Have a good one.